We making moves. We making major moves. We making moves. We making major moves. We going all in. Like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I'm Mr. Man. Welcome back to my channel. It's been a hot minute since I dropped a video. I've been out in Mexico with the family, enjoying myself. But while I was out there, I'm a businessman first. So I was checking out real estate because that is my true love. I love crypto. I love what crypto brings, and it's going to be spectacular when it pops off. But real estate is where I found my passion for business and entrepreneurship. This is the hotel I was actually checking out in Mexico, called the Hotel Esmeralda and Boutique. This is it here. Just to give you guys a sneak into what I've been doing here. Here it is. Here's my breakdown of how everything works. Because I like to read numbers. I love to read numbers like a book. All right, this is the evaluation of the property here. And that feeds into my scorecard. Tells me what I like, what I don't like about the property. And then goes into renovations. And here's my investor pro forma. This is the Esmeralda right there. Then it goes into ultimately, I'm going to end up foregoing this property here. It doesn't fit into in terms of the money category, or what I'm looking to do, where I'm looking to go. But this would be a wonderful, wonderful place to own, just not presently. So I'm going to keep looking. Next stop might be Bogota, Colombia. Might check out, I want to move to the Canary Islands still. Might check out a few other places. So we'll see where life leads. But today, where is my mouse? We are going to be going over a few things here. We're going to be going over financial market infrastructure in accordance to what BIS CPMI states in regards to the PFMI, the principles of financial market infrastructure, how Ripple had taken the Annex A right here, which is part of what needs to be done. Stellar had done this as well. As a financial market infrastructure platform, you have to structure things a certain way when you're writing to certain entities. So Ripple had done that, and I'll show you how they did that and how they adhered to this Annex A as laid out by, let me show you, by these guys here, CPMI. There we go. Committee on Payments and Settlement Systems, Disclosure Framework and Assessment Methodology. Let me get back to where I was. Here we go. And then here's the letter that Ripple had used to write to the HM Treasuries in following that frame and that framework and that structure. Then we're going to jump into a act less known by people here, the DORA Act, which is the Digital Operational Resilience Act. Now, my thoughts are, for a black swan to exist like we saw last night or today with regards to that ship that had run through that bridge there, this will cause one here. This framework here will cause a cybersecurity risk, a threat to exist. And as I go through it, you'll understand why. We're going to jump into a bit more of what DORA is. But I do want to get you guys into a video here discussing what DORA is. It's a quick 5-minute video. Let's do this. So DORA here. The way that they need to, the individual writing to whoever they're writing to, need to structure their letters like this disclosure template. So the executive summary. This section should summarize the key points from the disclosure framework, including a brief overview of the FMI, financial market infrastructure, its participants, its legal and regulatory framework, its primary risks, and its key risk management and other relevant practices. Summary of major changes since the last update of the disclosure. General background of the FMI, okay? So a general description of the FMI and the markets it serves. This should provide basic, concise description of the services offered and functions performed by the FMI. It should also provide an overview of the markets the FMI serves and the role it fulfills within these markets. Further, the section should include basic data and performance statistics on its services and operations. an FMI should provide. For example, basic volume and value statistics by product type, average aggregate intraday exposures of the FMI to its participants, and statistics on the FMI's operational reliability. General organization of the FMI, legal and regulatory framework, system design, operations. So now that we have an understanding of that, we'll go right into the introduction. Using blockchain technology, Ripple allows financial institutions to process payments instantly. Here's the overview now, like we just discussed, of how they need to follow that structure in Annex A set up by the CPMI and BIS. Cost effectively and with end-to-end visibility anywhere in the world. Our customers are financial institutions that want tools to effect faster and less costly cross-border payments, as well as eliminate the uncertainty of the risks historically involved in moving money across borders using interbank messaging alone. All of this is done in compliance with AML BSA regulations. AML is Anti-Money Laundering, BSA is Bank Secrecy Act. So some customers, in addition to deploying Ripple's blockchain solution, RippleNet is their actual framework there. RippleNet is the FMI, the financial market infrastructure. That's what the banks will be leveraging on top of the XRPL. Leverage a digital asset known as XRP, just as Bitcoin is the native asset to the open source. You ever wonder why these banks are connecting to RippleNet now? Or they're not connecting to the Bitcoin platform, the Bitcoin ledger, they're connecting to RippleNet. The BOE is already integrated with Interledger. Mojaloop is integrated with Interledger. Although Ripple utilizes XRP and XRPL in its product offerings, Interledger is the actual blockchain itself. XRPL ledger is the ecosystem where XRP is utilized at that point. A lot of people think that just XRP is the asset. XRP is a asset. XRPL is actually the asset where all the tokenized issuances live, if you will. Tokenization in terms of RWA, the real world assets that will exist within the XRPL and the Stellar development ecosystem. There are other blockchains as well. I'm just using these two because these are the two that I study a lot. I also study Algo, XDC, HBAR, but these ones here for financial market infrastructure are the two that I'm talking about here. Ripple leverages XRP for use in its product suite because XRP's suitability for cross-border payments. Key characteristics of XRP include speed, scalability, energy efficiency, and cost efficiency. As we continue to go down, now with this overview, Ripple respectfully submits the following response to the Treasury Select Committee's inquiry. If there are any points included in our response to the committee, may wish to obtain further information about that. If you recall, back here, we were talking about the response. Where is it? General description. Did I go past it already? Executive summary. We did that. Summary of major changes. There were none. General background of the FMI. We discussed that about Ripple. General organization. Okay. And then this section should provide an overview of the FMI's legal and regulatory framework, including legal and ownership of the FMI. Let's see where they went into that. Holistic regulatory framework. So here we go. Here's the framework here. Look at that. Yeah, they cover it all. They're talking about MiCA over here. MiCA regulations or MiCA, whatever you want to call it. So MiCA is coming in. We have stablecoins coming in June 30th, 2024. We have MiCA finally being implemented December 30th, 2024. And what most people are not aware of, or if they are, don't talk about it much, is DORA. Digital Operational Resilience Act. Boom. That's what this is. That's what DORA is. Here's the implementation for DORA. Let me just pull this up here for you guys. This is what it's actually started January 16th, 2023, and will be implemented January 17th, 2025. Right? So there's been different implementations of things taking place, being implemented for regulations, but you have to follow. You got to follow what's happening, right? It's not just, I'm waiting for regulations to happen. There are regulations upon regulations within regulations that need to adhere to regulations. Like this stuff is It's not just you're waiting for regulations. What precisely are you waiting for? And I think there's going to be a black swan with this, because once stablecoins come in June, once MICA's dropped in December, and this becomes framework January 17th, 2025, I will let you hear why I believe that something's going to happen. All right, let's do this.
I've been doing a number of discussions within the marketplace over the last number of weeks, and what's emerging is that there's 5 key areas that firms are being encouraged to look out for with respect to the Digital Operational Resilience Act over the next 12 months or so. The first one is in relation to the need for firms to have a more flexible and adaptable approach to their strategies and frameworks for digital operational resilience. Within the EU, we'll see the advent of the regulatory technical standards and the implementing technical standards. Those will become publicly finalised over the next number of months, and the challenge for firms there will be the immediate need to adapt and comply with those technical standards. For firms located within the European Union, but also with a presence outside of the EU, we will see those firms, no doubt, implementing and adapting a global approach to operational resilience, typically which will be underpinned by a global operational resilience strategy and a global operational resilience framework. I believe we will see these strategies and frameworks account not only for the EU regulations such as DORA, but also more international regulation and guidelines outside of the EU as well. The second area that we'll see emerging over the next number of months as a result of the advent of DORA is the whole area of digital operational resilience testing, particularly the advanced testing element, otherwise known as threat-led penetration testing. This for me is a net new area that we've seen come through as a result of DORA.
Right here. Threat modeling adds value to penetration. He just said threat level modeling, all right? That's what we're discussing here. I had actually, all right, is that it? No. What is threat layer penetration testing? That's what he was just talking about. Threat layer penetration testing involves a comprehensive approach that combines threat modeling and penetration testing to enhance security measures. So there's testing involved. Why does something have to happen? Something has to blow up to see if what they've been testing on the background, on the back end of things, can now work in a live scale, real working model now. They have to know if it happens in a live scale, real working model. And this is all about cyber resilience here. We're talking about DORA, Digital Operational Resilience Act. This will be the act that, when implemented, will cause something to happen. Something to do with stablecoins, because stablecoins are rolling in, right? Right? USDT has been the biggest player in this space. Am I calling USDT to go out? We'll see. We'll see. This method integrates and I said USDT, not USDC, Tether. This method integrates the proactive process of threat modeling, which identifies potential vulnerabilities and threats within a system or application, with the simulated cyber attacks of penetration testing. By merging these practices, organizations can better understand their risk posture, prioritize potential threats, and strengthen their overall security reliance. Threat layer penetration testing allows for a deeper analysis of security weakness by simulating real-world attack scenarios and providing valuable insights into the effectiveness of existing security controls. This combined approach enables businesses to proactively identify and address vulnerabilities before malicious actors exploit them, ultimately bolstering the organization's security posture. So does something happen with Tether? And because something happens with Tether, there's a ripple effect into the USDT itself, and Tether can withhold the conversion of their USDT into whatever the currency that the person or recipient wants to transfer it to. They can withhold that. They can stop it from happening, and you could be stuck in USDT. Tether has that ability, right? Things people need to know, need to be aware of. Let's jump back into this.
The challenge for firms here will be how do they build upon their existing types of testing and their testing programs in order to design and implement an end-to-end digital operational resilience testing program. The third area that we'd encourage firms to look out for relates to the area of critical IT third-party providers, which is a really big area for me in respect to DORA. We will see the list of critical third-party providers becoming published and confirmed over the next number of months. And for me, this will be a game-changing period throughout the regulation. This will give firms the opportunity to leverage the designation that's been assigned to the critical third-party providers and also use that as an opportunity to gain a deeper level of understanding and assurance over the third-party providers' resilience capabilities. The fourth key area relates to ICT asset and configuration management.
Critical third parties, huh? Critical third parties operational resilience. Well, let's just see. I have some questions here written down here. All right. What does digital operational resilience for a central bank look like? So, digital operational resilience for a central bank involves ensuring the ability to withstand, respond to, and recover from ICT-related disruptions and threats, including cyber attacks. It focuses on enhancing, and this is where Project Polaris comes in, for offline purchases. It focuses on enhancing technology and cyber risk management to create a regulatory framework that promotes resilience in the financial sector. And I don't believe USDT can be operated offline because I don't know if it's in the Stellar ecosystem or in the XRPL ecosystem. This resilience is achieved through robust ICT risk management, incident reporting, digital operational resilience testing, and oversight. The the DORA, sets requirements for central banks to manage ICT risk effectively, establish detailed records, contracts, report significant issues, and conduct resilience testing. DORA aims to harmonize regulations across the EU, contributing to the digital transformation of financial entities by addressing operational risk associated with digitization. So, how has Ripple's involvement with the BOE, Bank of England, created resilience for the ICTs in DORA's regulations? And ICTs is information communication technology. So, Ripple's collaboration with the Bank of England has contributed to enhancing resilience for information and communication technology. There it is there. In line with the Digital Operation, the DORA's Act. By partnering with the BOE and other entities like the Digital Pound Foundation, which you guys should all be familiar with now, Ripple is actively involved in fostering responsible innovation and growth in the crypto asset space, particularly in the development of the CBDC. Right? They have their own platform through RippleNet. There's a back end now that they can do a test, if you will, for CBDCs for the central banks. This collaboration likely involves leveraging Ripple's blockchain technology to improve cross-border payments, security, and transparency, aligning with the objectives of DORA to ensure operational resilience in financial systems. Ripple's engagement with these institutions not only promote technological advancements, but also support compliance with regulatory framework like DORA by enhancing the security and resilience of the information communication technologies infrastructure within financial institutions. So DORA will usher in regulatory standards. MiCA's coming in for stablecoins, EMTs, electronic money tokens, and ARTs, asset reference tokens. DORA, will indeed establish standards aimed at enhancing digital operational resilience for financial entities. This EU regulation, effective January 17th, 2025, focusing on strengthening IT security. So this is, now they're strengthening IT security. So you better believe there's going to be a black swan of sorts in regard to a cyber attack, because I need to know that all the testing that they've been doing on the back end can work real life now. Something's going to happen. All right, we've been hearing about 10 days of darkness or whatever it is. Could this be it? Could this be the catalyst? DORA harmonizes rules across 20 different types of financial entities and ICT third-party service providers, setting targeted guidelines for ICT risk management, incident reporting, digital operational resilience testing, and managing third-party risks. The regulation also mandates the development of technical standards by European Supervisory Agencies, the ESA, to further specify risk management framework, including reporting criteria, outsourcing policies, testing procedures, and oversight. By introducing these standards, DORA aims to promote consistent approach to digital operational risk management within the financial sector. So once stablecoins kick in, you better believe there's going to be something that needs to be set for operational resilience, right? Because it's going to continuously be cyber attacks, guaranteed. Back to this.
Management. This area under DORA advocates for firms to have an end-to-end asset inventory and an associated configuration management database. The challenge, no doubt, that we'll see for firms here is how do they ensure that their CMDB and their asset inventory is in fact fully complete and accurate. And I think also we'll see a trend by financial entities to look to link this CMDB and asset inventory into their operational resilience view of critical business services. The final area to look out for relates to the so-called oversight framework, which is being introduced as part of DORA. The oversight framework, its purpose is really to allow the European supervisory authorities, so in other words the EBA, ESMA and EIOPA, to oversee the digital operational resilience capabilities of the critical ICT third parties. As part of the oversight framework, we will see the joint examination teams being stood up and operating by conducting inspections across the EU critical third-party provider base, once that base has been confirmed. And something we're also seeing closer to home here in Ireland is the fact that across the EU, the national competent authorities, such as the Central Bank of Ireland, they will soon begin to play their role, particularly in relation to the oversight of threat-led penetration testing.
So we just heard the same thing. I'm almost positive we did. Ireland, threat level testing. Central bank authorities, crypto firm Ripple. Decision brings payment and exchange company under regulator supervision for purpose of anti-money laundering rules. Cool. U.S. payment and exchange company Ripple has become the latest crypto firm to be authorized under the Central Bank of Ireland's virtual asset service provider regime, bringing it under the regulator's supervision for the purposes of compliance with anti-money laundering and criminal financing rules. You won't hear things like this anywhere else. I'm Mr. Man, and this is how I rock. This is how I roll. I bring news that's not readily available in the crypto realm, right? I like to put the pieces together from the regulatory back end of things and then show you how it's going to manifest itself in our real world. So now we know to look at the Bank of Ireland coming up in 2025, or even from now till then, because they are going to be the ones looking at operational resilience, and we know Ripple's in there like swimwear, brethren. Let's continue. DORA from the central banks here. Digital operation. This is the Central Bank Central Bank of Ireland. There we go. So on December 27th, 2022, the Digital Operations Resilience Act was published in the official journal of the EU. This is from Ireland as well. This includes regulations and a directive on digital operational resilience for the financial sector. This regulation is now in force and will apply in full force from January 17th, 2025. DORA applies to a wide range of financial entities regulated by the Central Bank of Ireland. For the first time, DORA brings together provisions addressing digital operational resilience risks in the financial sector in a consistent manner in one single legislative act, which Ripple happens to be a part of now. How coincidental. It introduces targeted rules on information on communication technology, ICT classification and reporting, digital operational resilience testing. Keep in mind, Ripple had already applied to HM treasuries in Europe, or the UK, from the standpoint of FMI, financial market infrastructure. And now we saw that the Central Bank of the Central Bank of Ireland here will be looking at operational resilience through this DORA Act, and Ripple has their license, VASP, virtual asset service provider, through the Bank of Ireland to operate there. Do you see those pieces put together there? Woo! That's how I roll, son. Regulated financial entities should recognize similarities between a number of key DORA requirements and existing central bank guidance in relation to outsourcing operational resilience. The next step, because there's a couple steps now, okay? They're doing this in batches here, right? So I'll go through the batch 1, and then I'll go through batch 2. So further specify required elements of financial entities risk management framework and, where applicable, a simplified risk management framework. Further specify the criteria for the classification of ICT-related incidents, material threshold for major incidents, and signify cyber threats. So this is the first batch, what they're going to be looking for, and how they're going to try to overcome or mitigate these risks. Further specify outsourcing policy on contractual arrangements for ICT service providers supporting critical or important functions, and to establish standard template to be used in the Register of Information in relation to all contractual arrangements on the use of ICT service providers by ICT third-party service providers. So that's all batch 1. What's taking place in batch 2? Establish forms and procedures. So now it's the forms for financial entities to report major ICT-related incidents. So if there's an incident, there's a form you got to fill out, send this into the EU, whoever the reporting body is you report it to, and notify significant cyber threats. Specify, probably a digital form guaranteed, not a piece of paper. Specify further elements for financial entities to determine and assess when subcontracting ICT service support. Further, specify the details of advanced testing of ICT tools, systems, and processes based on the threat-led penetration testing, including criteria to be used to identify those financial entities that are required to perform threat level penetration testing, TLPT, and to harmonize conditions enabling the conduct of oversight of ICT. So if you guys want to know why the price of XRP isn't moving, the price of XLM isn't moving, the price of your favorite ISO coins aren't moving, there's so much taking place. There's so much testing that needs to happen still. There's so much that needs to happen in the backgrounds before these things can even move. Before they can even move, right? Everything's happening, a lot of things, not everything, a lot of things are happening off chain still. All right, I showed a video of Jenna Pache. Hold on, let me show it to you guys here. Here's a video of Jenna Pache in an interview here talking about purposeful latencies. When I say latency, I mean purposeful friction they're allowing into the system right now between both worlds, on-chain and off-chain, purposeful. So the purposeful latency placed on digital economy serves as a strategic mechanism that facilitates the transition towards digitization and innovation. This intentional delay in process allows for more efficient and effective adaptation to new technologies and practices within the digital economy. By slowing down certain aspects, organizations can better manage the pace of change, ensuring a smoother, in a sense, much slower, so people don't recognize it, transition and reducing potential disruptions. This deliberate latency enables businesses to adjust their strategies, infrastructure, and workforce gradually, aligning them with the evolving digital landscape. It also provides opportunities for learning, experimentation, and refinement before full-scale implementation, ultimately enhancing the success of digital transformation initiative. This purposeful latency in the digital economy acts as a controlled mechanism to balance rapid advancement with stability. All right, let's hear what she has to say about this.
From one bag to another, it can take 3 to 5 days. In terms of the technology risks, obviously, you're building, at the moment, the technology that we are currently using is based on legacy systems. Sometimes when I want to make a payment from one bank to another, it can take 3 to 5 days for that payment to go through. There's new institutions coming on board who will do instant payments across the board. When we start moving towards CBDCs, is the infrastructure going to be completely different? and separate, or will it be integrated into the current infrastructure of all the participants in the financial markets?
I think by necessity, it will be different and separate, but I think we will need interoperability and interaction between the two, because we're, first of all, not going to go overnight from a system where we have, delayed settlements, where we have payment latencies and inefficiencies and things like that, to a magic one where we have, instantaneous settlements and payment happening. Legacy infrastructure will still exist and it will continue to run. New infrastructure will be introduced, but it's going to take years before, front to back processes and systems can be fully, re-architected and re-engineered and optimized to work with those. And so we're going to see a lot of this kind of intermediate landscape where some of it might be, we have, super efficient digital currency infrastructure over here, but sometimes we may need to actually introduce latency to get it to work with the older systems, and then gradually, move off that kind of bridge over time to a more, native infrastructure and stuff. And so that's something that we're seeing is increasingly under discussion about how that kind of transition is going to take place.
So why did I choose Jenna Pache for this here? Why did I choose Jenna Pache for that? Because Ripple's helping the BOE. Ripple is also part of the Digital Pound Foundation. They are a partner helping to create that CBDC. Jenna Pache there, she's the lead of the Digital Pound Foundation initiative for the digital pound. So that's why I'd gone that way. So this is the old article from 2021, but just to show you guys some proof in the pudding there, I like to show all my receipts here. Ripple partners with Digital Pound Foundation for development of British CBDC. Am I moving slow? Everything's moving slow. I'm doing the robot here. Okay, anyways, this is back in 2021. Blockchain-based company Ripple has officially partnered with an independent forum, Digital Pound Foundation, to explore the development and facilitate the rollout of British's CBDC in the UK. Besides Ripple, the fastest smart contract company, Avalanche, is also coordinating with the DPF on this project. Digital Pound Foundation is a non-profit organization focused on the development of and implementation of the well-designed digital pound for Britain. Perfect. I want to keep this one short. It's about half an hour now. I hope you guys found something in this. I'll see you in the next one.
We making moves. We making major moves. We making moves.